Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, March the 22nd. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please read over this disclaimer as it talks about how everything I talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. And the reason why I can't give investment advice is because I don't know your risk parameters. I don't know what's in your portfolios. And bottom line is, please remember the past performance of any trading system or methodology is not necessarily indicative of future results. All right, having all that out of the way, let's get it on with some economic data across the pond. Now, remember, we've talked about this quite a bit. We're talking about PMI, and it's the Purchasing Managers Index. Anything above 50 is expansion in the economy. Anything below 50 is contraction in the economy. We've been above 50 for quite some time now, which has been a global expansion. But across the pond, they get flash PMI numbers. We get them here in the United States. They're not as widely looked at as our ISM, which is the Institute of Supply Management. PMI, CPI, things of those names, things like that. So our flash is not nearly as robust of a, it's robust, I shouldn't say that, but it's not a leading indicator like our ISM is. That's the one we're going to be looking at for us. But across the pond, we do have flash PMI estimates. Out of France, we've got our flash manufacturing PMI coming in at 53.6, expected to be 55.6, so 2 ticks lower. The flash services PMI for the French came in at 56.8. It was supposed to be 57. Not too much off there, but they did revise last month's number down from 57.9 to 57.4. So not a huge revision there, but nonetheless, I want you to get the picture of what we're seeing here. And now the German flash manufacturing PMI came in at 58.4, expected to be 59.8. Flash services PMI for the German region came in at 54.2, expected to be 55.0. No revisions the last months on either of those numbers. And then the European region, flash manufacturing PMI came in at 56.6, supposed to be 58.1. And flash services PMI for the services for the European region came in at 55, even, expected to be 56, even. And they revised last month's number down from 56.7 to 56.2, so a slight revision down there, making that overall number look not that great. Now, let's talk about all of these numbers. All of these numbers did come in lower than expected, so we're not seeing a lot of better economic data. We're actually starting to see a little bit lower economic data across the pond, which is that whole slowing thing I talked about early on in the week when we were talking about now we're going to start seeing the euro and euro regions, maybe emerging markets, value of their currency go down and the dollar going up because we're still kind of seeing expansion here. We're doing better than the global economy. That should drive the dollar higher, push commodities lower. That's what we were talking about there. All right, here in the United States, we got initial unemployment claims coming in at 229,000, expected to be 225,000, so slightly higher than expected there, but not anything major to write home about. Our flash PMI estimates came pretty much in line with expectations, but we're not really looking at those too much, so they're not going to be a big market mover for us. I think that the overall global economic data points that we got over in the European region is really what's causing the overall equities to kind of slump today, especially after we got the FOMC interest rate increased up to 1.75. I'm sorry, I kind of screwed that up. I said they were expecting not to make a move. It was actually expected to make a 25 basis point move, which is what they did. So we are now at 175. So that increase in interest rates, they said they're going to continue to increase interest rates maybe 2-3 more times this year. And then next year, 2 times. The next year after that, in 2020, 2 times. I don't think that they're going to be able to raise the rates that many times as we are seeing this interest rate increase here start to already hurt the emerging markets and the European region. Because people are going to put their money here rather than over there when they have no interest rate increase over there. So it's going to start hurting and helping us a lot more, but we need the global economies to help us expand. So, all right, enough about that soapbox. Let's move on to the overall markets. We got crude oil moving just slightly lower today, with down about 61 cents or so. But the thing I really want to note here is how it is really finding resistance on this trend channel. It kind of bumped up against there yesterday, pierced through it slightly. One could say it almost settled inside of it, but today another half back on the day, which is a pretty bearish signal, to be quite honest. That not looking too great, and part of that could be having to do with the global economy is not really firing on all cylinders. We are expanding. Don't let me get like too much of a bearish thing going on there. They are expanding. It's just not as good as we would like to see. All right, gold futures slightly higher today by about $4. That doesn't really look like that on this chart, because this chart is actually showing day and evening sessions, which don't really count in the whole plus or minus column here. But we can see yesterday gold futures just had a blast off to the upside. Today giving back a little bit. Could be just a little bit of profit taking. I think gold's overpriced, but we talked about that whole Russian thing where the Russians are hoarding gold right now and probably driving that price higher. All right, we've got Bitcoin futures moving lower by a couple of 100 points right now, right to the point of control. This point of control has moved, because remember, I used to have this on a daily chart where it was a 30-minute breakdown. That gave this market profile a little bit different of a profile. We can see where the most time has been spent is here. It's saying the most volume has moved down to this area, but we can see that the bar up is still up here. So that's a little bit wanky, unless I can't see something underneath that red bar that's a little bit overextended to this side. But I would have to still say it's probably still right there at around 11,000. And kind of discount this move here. I'm not really sure why that's happening, unless this just hadn't gotten updated or I can't see something there. That seems a little wanky. But having said that, we did see tweezer tops here, continuation to the downside. Try to get a little bit of a bounce here, but it seems like it's still pretty bearish and wanting to roll over still for the Bitcoin futures. And then we've got the VIX moving higher up into the 20s, almost 22. It was 22 earlier this morning. That being said, the reason why is because we're seeing the Dow Jones and the broader equities really come off today. We've got the Dow Jones down 475 points right now, very close to the lows of the day. One thing to note, we've broken below this 38.2 Fibonacci level. That's going to be pretty important here, because that should act as a support, as it acted as support here. But having said that, when we look at this, we are looking at a very bearish trading pattern here. We're getting a little bit of bounce. We did get a higher low here before we bounce, but we're still seeing lower highs, which to me is very bearish. If we can hold up right here, it will look like a nice little support line on this 38, because we'll have like a little bit of a tweezer bottom inside of a move, which isn't as robust as something that's at a high or a low. But nonetheless here, that is going to be a pretty important line in the sand for the Dow Jones to stay above. And it looks like we are just starting to tread that water, getting our head back above water in the Dow Jones. At least as of right now. That was like a 50-point rally while I was chitter-chattering right there. All right, we've got the NASDAQ off by 138 points. Came down and tested the value area low. Remember now, this measured move here is from the low to the high to this low here. But I drew it out here just so I could see the numbers over to the side. When it gets in here, it gets a little bit funky where I can't see it. So the measured move is to here. And it is finding support on the value area high as it starts nearing that bottom there in the NASDAQ. All right, E-mini S&P is down almost 44 points right now. And again, similar situation, came down to test. This is that same measured move type thing that I put on here with the yellows, as we saw in the NASDAQ and a couple of the other ones. I'm starting to make these measured moves off the lows to this point here to give us some a little bit more clarity as to support and resistances in and around this area. But we can see when I redrew the triangle, we're busting out to the bottom side now. This will act as support, the 61 Fibonacci, which lines up quite nicely with this 38, and it's right in between this value area high. So all of those things, we've got a lot of work to get through some of this stuff here in the E-mini S&Ps. But if it stays above the 61 or this 38, which line up perfectly together, making that a major support area, whenever you get those two Fibonacci charts starting to line up like that, that's where you really see some real strength in support and resistance. And you can see some of the other ones that didn't line up very well. I just pulled them out. All right, on to a few. Sorry, forgot about the E-mini S&Ps on the 30-minute chart. These are daily sections, 30-minute candles. As you can see, we bounced right off of that line twice, came down, tagged it, tried it again, and now we're starting to push up and away. And that's what we saw happening as I was speaking in the Dow Jones. That was that little bounce that we're seeing showing up here in the mini S&P. Same thing happening over there in the Dow Jones right now anyway. Could be a dead cat bounce. SPX, I just wanted to throw this up here because this is another situation where I drew that measured move off of this. SPX is the ETF for the SPUs. This is the major one, so it runs almost lockstep with it for the most part, besides the fact that it's an ETF. The other's a future. There's going to be a little bit of difference there, but you can see it came down, tagged this 23 Fibonacci level off of that measured move, and are starting to bounce up and away. When I started this, we were touching it. Now we're seeing a nice rally happening, going on. All right, a couple of things that I've done in my margin account and in my IRA. The only thing that I did was Gilead in my IRA, so let's start over there. And Gilead, I went in there and sold the 82 calls in April, and then bought the 92.5 calls in April for defining that risk. Sold that for 35 cents. Over there in my margin account, I got a little bit better pricing and sold the April 82 calls for 43 cents in there. So obviously looking for some downward move here in Gilead. My portfolio is getting overall delta negative, which is kind of the way I want it right now. I'm playing that out as we speak. But having said that, with the Disney trade here, didn't really know what direction it's going to go. It has a tendency to kind of settle down in between the earnings reports. Not a whole lot going on right now. We are having some spring break. People probably go down to Disney, but it's really not their best season right now. We're kind of in between all of that stuff. So I think we're starting hearing more people going down and going to Disney here pretty soon. Anyway, with Disney, I went in and sold the April, sold the 110.95 strangle in there. So high implied volatility, was able to get pretty far away from either markets. As you can see, those 110 calls way right up here above this spike that we got. And then the 95 puts that are my other side of the trade are below this 52-week low. So I've got the 52-week low on the puts, selling those 95s, and then the 110s is well above this spike here. And as you can see, it is kind of a negative pattern, but I think we're going to start bouncing around here right now. All right. And do I have any other? Nike. Nike is the trade that I'm going to be looking at for earnings. And as you can see, it's setting up right here on this 23 Fibonacci. So I'm actually looking at being able to get below this 38 and possibly even above the $70 mark. So I'm leaning right now towards the upside as the retailers and things of that nature did very well for the Christmas holidays. I think Nike probably did as well. All right, so probably playing Nike to the upside. You can check me out on Twitter at Wolfman's blog. Please like and or comment at the bottom of this what you like about it, what you didn't like about it. Give me a thumbs up, thumbs down. I don't care. Let me know. Anything is going to be good feedback for me, because as long as it's constructive criticism, I'm all for it. All right, so like or comment at the bottom of this video and tell me what you think of these videos, or if you think I need to add anything else into it to kind of put some stuff into this daily market commentary that you are really looking at. I'll throw my 2 cents in there for you. All right, so go to protraderstrategies.com, sign up for Friday's webinar on the long strangle. I'll show you when and where to set that up to increase your probabilities of success. Remember, last time I did it on the long straddle, that one would have worked out quite nicely in Facebook. That was one of my examples in that webinar, but I went on vacation and I didn't throw that thing on there. But, you know, it is what it is. All right, so that's all I got for you guys today. If you can't take that, take it easy.